Think inflation is in the rearview mirror? Keep your eyes on the road. You might be headed for a crash. The latest consumer price index is flashing a warning. Hazardous roads ahead. Persistent inflation is exactly why top financial strategists are bullish on commodities, especially gold and silver. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. The Labor Department recently announced that the annual core consumer price index rose in September, climbing by 0.1% to 3.3%. This likely doesn't surprise Philippe Giselle, Chief Strategy Officer at global banking giant BNP Paribas, who told Kitco News, "I'm a big believer in the world where inflation runs wild." Giselle's outlook on inflation is what's driving his big enthusiasm for commodities right now. He sees it as the key to navigating the global economy. Giselle told Kitco, "I think we're still in the very first inning of a major bull market in commodities." He added, "You have to own real assets. If you keep money in the bank, you'll lose 50% of your buying power over the next 10 years, so you have to move to real assets." Commodities are gaining attention for a reason. They offer a real way to protect your money when inflation eats into the value of traditional investments. It's about staying ahead and not falling behind. A group of analysts at Bank of America recently noted that while commodities have delivered annualized returns of 10 to 14% since the start of the decade, 30-year treasuries have lost nearly 40% over the last 4 years. This performance has led the same analysts to suggest it might be time to swap bonds for commodities in the traditional 60-40 portfolio model. Like Giselle, these analysts also predict persistent inflation ahead. The commodity secular bull market in the 2020s is just getting started as debt deficits, demographics, reverse globalization, AI, and net zero policies are all inflationary. If you have 4% inflation for 10 years in a row, you lose half your purchasing power. That also means the real value of debt is cut in half, and that's the plan. Your only protection is real assets, commodities, gold. Giselle is especially bullish on gold, predicting it could reach as high as $4,000 in the near term. He also favors silver, which he expects to perform well in the commodities bull market due to its dual role as a precious and industrial metal. Giselle referenced the 2 prior times silver approached $50 an ounce, predicting, "We will go back there and beyond." Giselle isn't alone in his bullish stance on precious metals. Many top investors see gold and silver as a way of staying on the road during economic uncertainty. Recently, Goldman Sachs named gold their top commodity allocation, with lead strategist Samantha Dart stating, "Gold stands out as the commodity where we have the highest confidence in near-term upside." In an evolving economy, thinking outside the box might be the key to protecting your wealth. Those who embrace real assets might be better positioned for whatever comes down the road. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.